So now we are going to backtest our strategy number 11, that is 12 p.m. strategy on previous day charts, and you will understand the concept very clearly. Okay, so let us go to the charts right now and let us backtest this particular strategy. So according to our strategy, what we are going to do? We are going to see the 12 p.m. candle of the day. We are going to mark the high, we are going to mark the low, and then we will patiently wait for the breakout. Right? So let us see the chart on 3rd of August of index market, that is Bank Nifty. Okay, so let us see the 12 p.m. candle of the day. Where is 12 p.m. candle? It is 12:10. See, this red candle is 12 p.m. candle of the day. So what we are going to do? We are going to mark the high, we are going to mark the low of this 12 p.m. candle. Right? And we can see that the very next candle gave a breakout on the downside. Okay, this green candle gave us a breakout on the downside, and once the low of this breakout candle is broken, we are going to enter on that particular point on that particular candle. And see, this red candle was able to break the low of this green candle, so somewhere around this point it was our entry point. Okay, this red candle would have been our entry candle, and this point would have been our entry point, and this trade went well in our favor. It has given us a very good profit. It has given us a very good profit. Okay, so what we are going to do according to this strategy? We are going to mark the high, we are going to mark the low of 12 p.m. candle of the day. We will wait for the breakout, which can occur either on the upside or it can occur on the downside. Here in this scenario, this green candle was able to give us a breakout on the downside. Right? And once the low of this green candle was broken, we would have entered at that particular point. So this would have been our entry candle. This red candle would have been our entry candle, and this point would have been our entry point. Okay, so I hope you understood this example. Let us see another chart right now. See the chart on 4th of August of Bank Nifty, and see the 12 p.m. candle of the day. This is 12.5 and this is 12. Okay, so this red candle again is the 12 p.m. candle of the day. This red candle is again the 12 p.m. candle of the day. How we can know? See this. Here 12 p.m. is the time. Okay, so what we are going to do? We are going to mark the high of this red candle. We are going to mark the low of this red candle. The very next candle was able to give us a breakout on the downside. Right? So this was our breakout candle. Here we can see that this red candle was able to give us a breakout on the upside. So here there are two scenarios. The breakout candle has occurred on the upside also. The breakout candle has occurred on the downside also. So the candle which breaks the high or low first is going to be our entry candle. Am I right? The candle which breaks the high or low is going to be our entry candle. And here in this scenario, what we see, that this red candle was able to break the low of the breakout candle first. Am I right? This red candle was able to break the low of the breakout candle first. Here the high of the breakout candle was never broken, so we were not able to enter here. But here in this scenario, this red candle would have been our entry candle. This point would have been our entry point. This point would have been our entry point, and this trade also went very well in our favor. You could have easily achieved your target. Okay, so I hope you understood these two examples right now. So let us see another example. See another chart on 27th of July of index market, that is Nifty Bank. Here again what we are going to do? We are going to see the 12 p.m. candle of the day. Am I right? So where is the 12 p.m. candle? See, this red candle is the 12 p.m. candle of the day. This red candle is going to be our 12 p.m. candle of the day. We are going to mark the high of this candle. We are going to mark the low of this candle. We are going to patiently wait for the breakout. Here the candle has given us a breakout in the downside direction. Right? So this is our breakout candle, and the candle which breaks the low of this breakout candle is going to be our entry candle. And the very next candle was able to break the low of the breakout candle. So somewhere around here, this would have been our entry point, and this red candle has been our entry candle. Right? Now you might be wondering where to keep the stop loss. Am I right? So there are two ways to keep the stop loss. Once you're marking the high and once you're marking the low, you can either keep the high of the breakout candle. This can be your stop loss, or you can keep the high of this 12 p.m. candle. Okay, these two can be your stop loss once you are taking a shorting position. Then If you are taking a shorting position, then this too will be your stop loss. Either the high of the breakout candle or the high of the 12 p.m. candle. This too will be your stop loss, and you have to strictly follow the stop loss. Once the stop loss gets hit, exit immediately. You need to exit your position immediately. Okay, and then wait for the next day. If you are using this strategy, wait for the next day. Okay, so I hope you understood this example also. So let us see another example now. Consider the example of Nifty Bank on 20th of July. Here what we have to do, we have to see the 12 p.m. candle of the day, right? So where is the 12 p.m. candle? 12 p.m. candle of the day is here. This red candle is the 12 p.m. candle of the day. So what we are going to do, we are going to mark the high, we are going to mark the low of this red candle, and we are going to wait for the breakout, right? Now the next candle, that is this green candle, has given us breakout in both the direction. It has given us a breakout on the upside and it has given us the breakout on the downside, right? That's why I have included this particular example, so that you can understand that this type of scenario is also going to occur. So once the breakout occurs, we are going to enter on the candle which breaks the high of this breakout candle. So this green candle, this green candle would have been our entry candle. This green candle would have been our entry candle. And on buying side, where to keep our stop loss? We will keep the stop loss at the low of the 12 p.m. candle or the low of this breakout candle. Okay, this too is going to be your stop loss, and you need to strictly follow this stop loss. You can either keep your stop loss at the low of the 12 p.m. candle, or you can keep the stop loss at the low of the breakout candle if you are taking a buying position. If you are taking a buying position, then low of the breakout candle or low of the 12 p.m. candle is going to be your stop loss. And we can see here that after our entry, this particular trade has given us a very good profit. Okay, this trade was in our favor. This trade has worked well in our favor, right? And as I told you that this particular strategy is going to work well only when the market is trending. When the market is trending, only then and only then this strategy is going to work very well. If the market is just stuck in a range, the market has no direction, at that time this strategy probably is not going to work well. Okay, so I hope you understood the concept regarding 12 p.m. strategy, which is very simple to understand and it is very easy to execute. Am I right? So according to the backtesting of mine, accuracy for this strategy has been around 70%. It is very good on trending days, especially on trending days the accuracy has been around 70%. And on sideways market, I have seen that most of the time my stop loss got hit. My stop loss got hit mostly on sideways market. So it is advisable, it is highly recommended that you use this particular strategy only when the market is having a good direction. Okay, when the market is trending, then and only then it is advisable to use this particular strategy. Or suppose if you didn't got any trade from your strategy till 12 o'clock, till 12 o'clock, if you didn't got any trading setup, then you can use this strategy also. If and only if you didn't got any trading signals from your strategy, then you can use this 12 p.m. strategy till 12 o'clock. Okay, and this strategy is very simple to use, just like 6C strategy. As I told you, 6C strategy is one of my personal favorite strategy, and this 12 p.m. strategy also works very well. So considering the simplicity of this strategy, considering the accuracy of my backtesting which I have done mostly on index and also on some stocks, my rating for this particular strategy is 8 out of 10. Okay, I will give solid 8 out of 10 considering the simplicity of this strategy and considering the accuracy. Okay, and this strategy is very simple to understand. I think it is not at all complicated. If you have any problems, then also I suggest you that you watch the explanation video again and see this backtesting video again and again, and you will understand the concept very clearly. So in the next lecture, we are going to see the second strategy of our strategy number 11.